Yo, what's good? What's good? What's good? Back again with another one. And yo, before I start with the video, just check out my entries. Check out my entries. I'm sure I'm gonna pop it on somewhere here. Check out my entries just to show you all I know what I'm talking about. Just to keep you all on the video, I know what I'm talking about. Yeah, supply and demand, market structure, how to get sniper entries. Simple as that. You don't need a lot of things to complicate your trading. Yes, it is a lot of concepts, but then once you blend everything together, it all makes sense. Yeah, as a beginner, I'm sure you've went through a lot of strategies. For some of y'all that are still in the industry, some of y'all that are still trying to figure things out, you finally found the holy grail. I won't call it the holy grail, but then you finally found how to get your sniper entries, how to apply supply and demand. So yeah, first thing with supply and demand, you're gonna have to learn this pattern because it happens on each and every time frame, each and every instrument, each and every day. The change in order flow pattern. This is the reversal pattern. Some call it a head and shoulder, but with market structure, with Dow theory, this is a change in order flow. The reason why it's called a change in order flow is because when price is moving up, when price is in an uptrend, when we're moving up, this is an uptrend order flow. This is an uptrend order flow. This is a buying order flow, meaning that price is heading up. The minute price breaks a low, this is a story on its own. Even here, this is a story on its own. It's saying, yo, sellers are coming in. Yes, sometimes you do get price giving you something like this and then continuing to the upside and not selling. But you can't predict 100% of the market. If we did, we would be 100% profitable. But then when we do get a change in order flow, that's a signal. And once you connect it with other signals, other confluences, then you get a perfect trade, you get a perfect setup. So yeah, order flow. Reason why it's called order flow, change in order flow, is because we're changing order flow from the upside. Now we need to go to the downside. Same as a downtrend. If price is heading down, giving us highs, lower lows, lower lows, lower lows, lower lows, lower lows. Once price breaks that high, then there's a story on its own. It's a change in order flow, meaning price wants to head up. This is a pattern that you should master because this is going to be used for your entries. This is going to be used for direction. It's going to be used for everything on the chart, for top down, for everything. Once you study this pattern and once you have the third eye on this, that's when everything changes. Because this can be spotted on the daily time frame. It can be spotted on the smaller time frames, your monthly, your 3 months, on Nasdaq, on USD, on EURUSD, on each and every instrument, on Bitcoin, and I'll show you all with Bitcoin. Everywhere, a change in order flow. So yeah, that's the pattern you need to study and master. Because once you get that, you're gone. You just need to study other concepts like your top-down, hedging, scaling in, risk management. Those are other things. But then with supply and demand, this is the pattern you need to study in order to get your entries perfectly. Sniper entries. So yeah, order flow. This is how you spot a change in order flow. When price is in an uptrend, I'm going to repeat this so it comes into your head every time. I'm going to repeat this almost each and every time I make a setup or I form something. Order flow, how to spot it. When price is in an uptrend, whether you in on a daily time frame, smaller time frame, whatever, if price is giving us highs, whether in candlesticks, whether in structure, once price breaks your last low, This is a change in order flow. This is what we call a change in order flow. So for example, if you're an intraday trader, you're starting on a daily time frame going down for each and every day setups, like for daily setups, I mean. Each and every day. But yeah, for daily setups, you're going to start on your daily going down or your H4 going down. Once you enter your daily time frame, you're going to have to look for this. You're going to have to look for this and know whether, if you're changing in order flow, whether you in wave 1 or you want to enter on the second wave or you entering on the third wave. Changing order flow. If price is coming down and you spot a change in order flow, something like this, either you in wave 1, wave 2 or wave 3. This is a reversal pattern. It happens on each and every time frame on the market. A reversal pattern. Once you study this, you're gone. Once you study this, you're gone. And how do we trade the change in order flow? When price breaks the high or when price breaks the low, we target a supply. In case of a sell, we target a supply. And in terms of a buy, we target a demand. Just like that. Just like that. Change in order flow pattern. You sell high here, you buy low here. Easy as that. That's the change in order flow pattern. And going forward, you'll understand why you need to study this pattern to know where you are in the market. Okay, let me explain another theory I didn't plan out, but it's simple. The wave theory. Price only moves in 3 waves. Price only moves in 3 waves. We have wave 1, wave 2, wave 3. Wave 1. Reason I'm using colors is because red is for down, 2 is for green, red is for going down. I mean, yeah, you understand. So yeah, we have 1, 2, 3. On the change in order flow pattern, this is for an uptrend, this is for a downtrend. On the change in order flow pattern, this is what happens. We have wave 1, wave 2, wave 3. And then price does what after changing order flow? Repeats. Wave 1, wave 2, wave 3. And then it repeats again. Wave 1, wave 2, wave 3. Just like that. This is the wave theory. You don't need to complicate it. This is the wave theory. You can get it on the monthly time frame or your daily time frame. You can just open the daily time frame and you get your 1, 2, 3, just like that. Or you get a change in order flow, the wave theory. So yeah, moving forward. Another concept, uptrend continuation. Here we buy. When you open a daily time frame and you find that price is on an uptrend, is giving you higher highs and higher lows, you buy. You wait for buy opportunities. You look for buying opportunities, You buy low, meaning you buy down at the demand. When price comes back, you buy down at the demand. If price is heading there, you buy down here. It's a continuation. That means price is continuing. For example, if we from a change in order flow here, if price was from a downtrend and then you bought here, this is how you scale in. You wait for price to get to your demand, you buy. You wait for price to get to your demand, you buy. You wait for price to get to your demand, you buy. You wait for price to get to your demand, you buy. Until you have a change in order flow, maybe on the bigger time frame. And then you stop buying. You wait for a sell, you sell. You wait for a sell, you sell. This is how you scale in. There's a continuation for an uptrend. This is a downtrend continuation. If we are from a change in order flow from the upside, from the upside going down, when price gives you supplies, you sell. When price breaks a low, going up to a supply, you sell. Going up to a supply, you sell. And how do you sell when price gets there? Going back to this change in order flow pattern. This, you only get it on your supplies. in your demand zones. Meaning if price is in an uptrend on the daily time frame and price gets here, you wait for a change in order flow there. I'll show you all on the chart. This is not hard. If price comes back to your demand here, you wait for a change in order flow. You buy. You don't just enter when price gets there. You wait for confirmation. You wait for that reversal pattern when price gets there. Even on the downtrend. When price gets to your supply, in this case, if price breaks here and goes back to a supply, you wait for a change in order flow there. You wait for a change in order flow there. Simple as that. Simple as that. If you don't understand, just go back to where I was explaining. You'll understand. And I'll also explain it on the chart. So yeah, let me cover change in order flow pattern, uptrend continuation, and downtrend continuation on the chart before I move on to other concepts. I'm going to make this a long video so I can maybe save it for private use in the future for those that want to learn supply and demand and how I trade. And I'm starting out my own community for traders that trade the same way I do. Just go down in the description and check out the link for the Telegram and join the Telegram group, and let's trade, guys. I'm going to be sharing setups. I'm going to be sharing signals, everything I see on the charts. Excuse me for the background noise. I have a dog. So yeah, let me cover change in order flow. Change in order flow. I just entered a trade on NZDCHF. Reason why is because of this change in order flow. Sell on the M15. There's a scalping setup, but it's going to make sense in the long run. It's going to turn into a swing. So I'm expecting price to drop to somewhere around there. But nonetheless, let me open NZDCHF on a different broker just so I can analyze it. Okay. Change in order flow. We're going to start with the change in order flow. How do you spot your change in order flow? With me, I'm a swing trader, so I start off on the 3 months time frame going down to my M15, M30, H1 to enter. So I'm going to show you all what to do. As you can see, on a 3 months time frame, we have a downtrend. If you don't see a trend continuation or a change in order flow, just drop down to another time frame, because you're not going to be trading the 3 months anytime soon. You just need to know your direction. So in this case, I'm going to drop down to a monthly, and on the monthly also I can see that price is continuing to the downside. Reason why is because this was a low, went up, we broke that low. Now we need to head up to the supply so that we can continue. So now, at least on the monthly time frame, I have direction. So I'm going to mark this out as my break and as my supply zone there, supply and demand. So now I know direction on where the monthly time frame wants to go. Drop down to the weekly time frame. Now we're going to look for what? A change in order flow to take us there. And as you can see on the weekly time frame, on this leg, remember price moves in 3 waves. Wave 1, wave 2, wave 3. So now I know that on the weekly time frame, on the monthly time frame, I have to catch a buy to take us there. But when we drop down, it's going to take us to other waves. You might find on the daily time frame we're on the first leg, or you might find on the hourly time frame we're on the second leg or the third leg. But then dropping down, I'm going to look for a change in order flow to take us there. And already I can see a change in order flow. As you can see, price gave us a high here, a low here, a high here, a low here, and we broke that high. There's a change in order flow. I'm gonna mark that out as a change in order flow. That's how you do top-down analysis, by the way. Change in order flow. After a change in order flow, let's go back to our whiteboard. After a change in order flow for a buy, what do we look for? We look for a demand zone. This is where we buy. And where's our demand zone? The last bearish candlestick before the move up, which is this one. We're going to wait for price to do what? To come here so that we can buy this market to take us there. So it's wave 1, wave 2, wave 3. Simple as that. Simple as that. And I'm going to show you all guys how you enter cells to take you there using your exhaustion, supplies, and demand. But then that's another concept I'm going to cover after changing order flow and continuations. So yeah, on the weekly time frame, we know that we have to go there. We're going to drop down to our daily top-down analysis. Yo, this chart is messed up, but I do understand it. It's messed up. Let me go back to my original chart. I don't want to clear things on my original chart because it's going to mess up everything. But then, let me just do it. It's fine. It's fine. But yeah, since it made sense on the monthly, as you know, on the weekly, I mean, I'm going to cover this. I'm going to cover this after continuations and everything. This is an exhaustion, by the way. Let me change this: exhaustion, supply, and demand. So yeah, since we now know that on the weekly, we change the order flow, we have to come here. This is wave 1, wave 2, wave 3. This is the reason why I have this here. So now we're going to look for what? We're going to look for cells. And as you can see also on the weekly time frame, price, after changing in order flow, we had what? We had a break of this low. This is a change in order flow also. As you can see, we broke. Now we have to go to a supply and come here. So now let's drop down to the daily. And already I can tell that price did what? Did go to a supply. And as you can see, reason why, I'm not sure, but price is telling me that price is in a supply. And there's another concept I have to cover. Let me just note it down. It's another concept I have to cover: discount and premium. Discount and premium. So yeah, since I know that price is at a premium area, I look for a change in order flow, and we did have a change in order flow. As you can see, we went up, down, up, and then we broke that low. Now we look for what? For a sell setup. Since we now have to go to where? We have to go there. And if you enter on the H4, we're going to look for a change in order flow there at our sell supply area. I didn't get it on the H4, went to the H1 and I got it. And as you can see, change in order flow. This is why I entered a sell there. So this is a intraday trade, sort of like a scalp, since even on the 30 minutes you can see the setup. So a scalp can turn into a swing trade. You can enter on the M30 and swing your trade maybe on the daily, on the H1, because we still need to cover a few more days, a few more candlesticks to come here. So yeah, continuation and change in order flow. Discount and premium. Let me just cover this quickly. Let me draw this up and explain discount and premium. This is also easy. So with discount and premium, price only has two ways to go. Either we cheap or either we expensive. If we're in an uptrend, we only buy at the cheapest area. Where is the cheapest area? At our discount area. So this is 50%. This is half of this move. This is the discount area. This is the premium area. So if price is in an uptrend, we only buy at a discount area. If price is in a downtrend, we only sell at a premium area. This would be my premium. This would be my discount. If price is in a downtrend, we only sell at a premium area. If we're in an uptrend, we only buy at a discount area. Let me show you all here. Since we change in order flow, we only buy down here. We sell up here. I don't know why it's green and okay. Yeah, we only buy here, sell up there. The reason why I said price is in premium area here is because of this. From here to here, already I can see that we have cells on top, and we did change order flow. So yeah, that's discount and premium. Uptrend continuation, downtrend continuation. Now we're gonna move to exhaustions. Sell exhaustion and buy exhaustion. With this, it's simple. After knowing your change in order flow and your change in order flow, your buy change in order flow, and your sell change in order flow, you have to understand exhaustions. Exhaustions come when you missed an entry. Maybe you missed the setup, or maybe you analyzing, you want to know where price is going. If price, for example, is in a downtrend and we change order flow and you missed the buy here, price is maybe is moving up, giving you highs, maybe all-time highs or something. What do? If we're in an uptrend, for example, you go for your supplies here. These are your exhaustion areas. You look for what? You look for a change in order flow in there. Then you target where? You target your demand. So you're selling to buy. You enter a sell here. When price comes here, giving you a change in order flow, you buy. Simple as that. Sometimes you might enter here, giving you a buy, and then you enter a sell here. I'll show you an example on USD JPY. I took a sell while I'm in a buy. And then when price got to my zone where I have to buy, I exited my sell. Then I entered more buys. I'll show you an example. I know what I'm doing. So yeah, this is an example for a selling exhaustion. Yeah, selling exhaustion. Let me show you all on the chart. Here's a selling exhaustion. Where's my supply? My supply is there. The last bullish candlestick before the drop, after the change in order flow, as you can see, this is my first exhaustion. Here's my second exhaustion. There. No, that's my third. Here's another one. But price reacted on the first one. Let me show y'all another one. Let me go on maybe USD. I missed the trade here. Exactly on the exhaustion. Yeah. I missed the trade. And as you can see, price is moving down. After this change in order flow, price went to that exhaustion and reacted. But then I can enter a buy. Reason why is because after this high was broken, we had a change in order flow here. Price needs to come in there to drop. So I'm going to wait for price to react off my exhaustions. So a perfect example, exhaustions. Let me go on to maybe NZDJPY. Another setup on where we can spot exhaustions. Another setup where we can spot. Oh, here, GBP-CHF. Let me show y'all. Let me show y'all an exhaustion. After this change in order flow here, price went down. We need to come back to this supply. We had an exhaustion here. Let me go on to the H4. Yeah, as you can see, we had an exhaustion there. So this is a whole mess, but then if you break it down, you'll understand. After this, change in order flow, we went down, exhaustion there, we have to come back to that supply. Now we have to drop, and I'm still on this trade. We have to come here. So exhaustions are simple. If price changed order flow and you missed the buy, you wait for price to get to exhaustion, you sell, then you buy, you wait for price to get to exhaustion, you sell, then you buy until you get to your targets. So yeah, that's sell exhaustion and buy exhaustion. Another concept I have to cover, I think I covered everything, but yeah, if you didn't understand anything, just go down to go back, not go down to. And guys, please join the Telegram and let's kill this. Let's kill this, man. If you don't understand anything, just text me on Telegram. I already have a group of traders, but it was discontinued back then. Just check it out, man. Just check it out. And let's work, guys. Let's work. Change in order flow. Where do you get it? You get it on your demand zones and supply areas. Sell exhaustion, you get it maybe up there. Yeah, sell exhaustions, that's when you trade a reversal. If price is moving in an uptrend and we're at all-time highs or something, you wait for an exhaustion and then you enter going down low. Just like with Nasdaq, if Nasdaq is giving you all-time highs, you wait for a change in order flow to take you down to your demand, to your daily demand or whatever. So yeah, as explained when we started the video, Bitcoin, let me show you how Bitcoin is at a demand. And let me break it down from my monthly. And as you can see, Bitcoin is in an uptrend. We had a change in order flow here since price was railing up and then we dropped down to this exhaustion. We're expecting price to come to the supply and drop. But then with Bitcoin, you can't be sure if it's going to drop. The reason why is because Bitcoin is influenced by fundamentals and it's backed by investors and all of that. So we're expecting Bitcoin to just rally up from there. Same as Nasdaq. You can expect Nasdaq to be dropping like currencies and all of that. So yeah, since we reacted from this exhaustion, let me mark it out. Exhaustion, supply and demand. We're expecting price to come to the supply and demand. If it does react from this, so now we know that price is giving us 1, 2, we have to go for 3. So now we have to ride the second wave. Going down to the weekly time frame. And on the weekly time frame, we don't have a change in order flow. I don't see a change in order flow on the weekly time frame. For a change in order flow to happen is when we're going to break this high, making this something like this. But since we don't see that, we're going to drop down to the daily. And on the daily time frame, we do have a change in order flow. As you can see, let me draw it out, there, there, there. And then we had a break here. We need to come back to a demand and continue going up. And continue going up. So now, since I know that price has to go to my demand zone, remember, discount and premium. So I won't be buying here to go up. I'll only buy under here. Discount and premium. So this was a demand I was looking at. This was a demand zone I was looking at. So since now I know that price has to go there, we change order flow here. Reason why I didn't use this as a change in order flow is because this high is higher than this one. So we had something like this. We need to go back to that supply and drop. Price came into an exhaustion. I'm expecting price to go there so we can drop nicely. Here, I'll be waiting for a change in order flow to take me up. Let's go on to the 4-hour time frame, and as you can see, we're already having a change in order flow. Not every change in order flow is gonna hold, but remember, a strategy can be 100%. Change in order flow, we wait for price to come here. Then we buy Bitcoin, targeting this high. There. Simple as that. So yeah, guys, do join the Telegram if you wanna milk charts the way I do. If you want help on supply and demand, and yo, let's get to it. Supply and demand.